Hello and welcome back to the channel. This is the channel where we teach you everything to do with forex trading, and we help you to build your small account towards achieving that good capital that you can use to trade. So my name is Hassan and I'll be taking you through today's lesson. On the screen we have GBPUSD. GBPUSD, it is a trade that we called yesterday. If you check the previous video, I think the video for yesterday, that is the video before this one. If you check the previous video, you will see that it moved well and we are already in profits. So this is the weekly time frame. I'll take you to where we had taken this trade from. This is the daily time frame. So the video before the one for yesterday, I talked about GBPUSD and I was telling you guys that if GBPUSD comes up here, by then it was yesterday, but one it was here, and I was saying that if GBPUSD comes up here to make this head and shoulder, if you could put the line chart to make this head and shoulder, and then we shall be selling GBPUSD. The stop losses would go above here, and we still have the position size calculator above there. You see the stop losses go above, we sell, and so far we are in profits of around 60 pips. 60 pips. If you can do your calculation, if you put 0.1 mini lot, that is $60. If you put 1, that is $600. If you put 10, that is $6,000. If you put 100, that is $60,000. So it is really upon you on which lot size that you manage to use, which account size you have, and managing your risk so well. So we entered this trade on the 4-hour time frame, and you can see how we tried to capture it perfectly, but we could not. You see, we have a demand zone around here. This demand zone is captured on the 1-hour. So as soon as price tapped in, we waited for a little bit later retracement, and then we entered. And as you can see, we are running in around 60 pips. This candle is retracing, but don't worry about it, it is going to come down. So if you come to the 1-hour where we saw the demand zone, this candle is coming to tap here, and then we drop down. So there is also another trade that is coming to happen for the lower time frame traders. Candle is going to tap there and drop down. So there is 1-hour demand zone that we use to enter this trade. Where is it? It is here. You see, there is a fair value gap here, there's a gap here, and then there is this candle, the supply zone. There is this candle here that dropped price previously. So we're expecting that price is going to come and tap in to cover this up, and then we drop down. Why did we take from this supply zone? Is because it was the only supply zone available. It was the only supply zone available up here. The rest of the zones here were covered, so it was the only zone that was remaining that price could potentially react from. That was the only zone that could potentially price could react from. So that is where we took our trades. That's where I managed to take our trades from. So now, that being said, on that 1-hour demand zone where we took our trade, you see, we marked it very well, and then we went to the 4-hour. I put my stop losses up here just because you never know what price could do. You know, price could go anywhere, but I knew there is no way it would cross up here because that was the demand zone that we had on the 1-hour. So far we are running at 60 pips profits, and we are soon moving our stop losses. I wanted it, if it goes to 70 pips, then I'm going to move my stop losses to break even, such that in case anything happens, I'm not losing I'm not losing any money on that trade. So all the stop losses have been moved to break even, past break even by at least 1 pip, just to be secure. So now what is happening is price can go or can do anything that it wants to do, and we won't be scared. We won't be scared because even if it goes where, we are not losing a dime on that trade. We already entered the trade. Our stop losses are already past break even, so we are safe in that trade. Whatever happens, we are not concerned about the trade. And now there is someone disturbing me here. Let me first finish shortly, then I'll come back shortly. Okay, so we can proceed. So now GBPUSD is that, and it is moving on well, so we are safe on that trade and we can just let it flow. When you come to the daily time frame, yes, there's a little bit of retracement, but don't worry, that is how price moves. To go back, come in front, so you just don't have to worry about it. As long as you know where the market is going, that should be your worry. The moment you know where the market is going, you don't need to worry about anything else. The moment it formed a head and shoulder here, there is no turning back. The thing is going down. Even if you go to the weekly time frame, you will see the same thing. There's going to be a little bit retracement, but trust me, we are even past the closing prices on the support of a double top. We are going down on the weekly time frame, guys. It is going down. Okay, so that was just a recap on the trade that we called. So we go to, I want to talk about GBP JPY. Yes, GBP JPY. So the Alchemist, that is how you managed to call that trade for the Alchemist, guys. So now let's start from the monthly time frame, and then we can proceed to where we're going to get our trades on the daily time frame. So this is GBP JPY. GBP JPY, we have GBP JPY, we have something that looks like a head and shoulder on the monthly time frame. Let me show you. Price was going up, retraced, went up, retraced. Now we have been in a consolidation. However, in this consolidation, what do you see? You see price coming here, going up, then coming down and going up, then coming to stand on this shoulder here. So you have an inverted head and shoulder. This is a shoulder, this is a head, this is another shoulder, and it is pointing up. What does that show? It shows that we are going bullish. That is the monthly time frame. So when you come to the weekly, what do you see on the weekly time frame? On the weekly time frame, you have price going up, going down, then coming up, then it has come here. When you got the line chart, you see this is a shoulder, this is the whole thing down here is a head, and this thing is another shoulder, like it's trying to form another shoulder on this level here. That is the weekly time frame. So the monthly is going up, weekly is still red, so meaning it is going down. Okay, so we go to the daily. Okay, and the daily, what do you see? You see that price has already sat here and now it is looking up. Do we have any structure on the daily? No, apart from this head and shoulder that we saw on the weekly. This whole thing down is a head and this is a shoulder, this is also a shoulder that we saw on the weekly. So now this is where it becomes interesting. The 4 hour. What do you see on the 4 hour? The 4 hour, this particular area here, you have a shoulder, and then we drop down, and then we form a QM for people who are trading MSNR, you form a QM. This is lower low, lower high, lower low, higher high. So in order for us to enter this trade, we want this to come down here, complete another shoulder to make a head and shoulder, and then we buy from this area here. Do not buy up here, wait for price to come down here. It can go up from here, it is okay, no problem, but we won't be in that trade because it has not given us any reason to enter it. So we are waiting for price to come down here, make a head and shoulder on the 4 hour, and then we shoot the marker up. Yes, so if you drop to the one, and also one thing that why I put this position size calculator here, we have a supply zone here, a demand zone here. You see this candle here, this is a demand zone. It gave us a shoot to the upwards. Let me, if I could mark it well, good, like that. So it will give us a push to the upside. So it has come, tapped in, pushed. So we are waiting for the second tap, which is going to make a head and shoulder, and then we push price up. If it comes, we are entering the trade confidently. If it doesn't come, then we won't be in that trade because we won't have any reason to be in the trade. So if you come to the 1 hour, what do you see? What do you see? What do you see? There is a supply zone down here. There is another one here that was used by this, and there is another one that was created here. What is the demand zone? How do we define the demand zone? For me, my definition of a demand zone is the last candle before a strong move or an impulse. So this is the last candle before the impulse. So there's a supply zone here, as well as if it comes down, it will help us to form another shoulder for this head. This is a shoulder, this is a head, so we want another shoulder down here. If it comes down here, you are taking that trade confidently. There, you're taking that trade confidently. So what would be our risk to reward? So this is it. There, you're going to risk around $40. That is if price comes there. But what I normally do is I reduce this one to the opening price of that candle around there. Good. So now that is 30 pips that we shall be risking. We're risking 30 pips to get how many? Let me remove this. We are risking 30 pips to get, let me use the 4 hour time frame. Good. We are risking 30 pips. This one would say to get 80, that is 1 is to get 100, that is 1 is to 3. But me, I would be targeting the high here, that is 300